So happy new year to everyone. Welcome to another year, another 2024. This is me preparing for the year 2024 as I have not been trading for some time, for like a good 4 months. I was noticing monitoring data, but I was too busy. But this is another year. We go for it. And yeah, not trying to make this video long, but basically, so how I'll be monitoring what I'm going to be trading for the month, for the month of for the month of January. So I've already downloaded this seasonal charts. I have this seasonal charts for dollar because of the uncertainty and the elections that are coming in. I'm not trading dollar for the month of January. I will, because if you can see, the seasonality chart shows why a bit choppy, and the Feds have already indicated that there's a possibility of a rate cut coming in, approximately 3 rate cuts for the year 2023, but I'm not sure yet because I'm not here to gamble. I'm not here to take the reversal. I'm here to ride the trend. I'm not here to start the trend or end the trend, just to enjoy where price is smoothly moving. So we can see that dollar is a bit choppy in January. Skip it. Seasonal charts are not the holy grail. It doesn't mean that's what's going to happen. But for me to increase my probability, I'll be seeing pairs that are moving quite well within that month, and I'll match them with fundamental analysis, what the central bank is saying, what are they saying, and I'll be matching them every week with commitment of traders reports. But for now, for the first week, every first week of each month, just allow the Judah swing to take place. Yeah. So for here, we can see that euro is also choppy. Australian dollar. This is one of the pairs I'm noticing for the month. So for the first one, let me just do and like quick notes, like a notepad. Not notes, but like a notepad. Okay. Stickies. Can I make this big? Oh my god. Okay. So we can say caps lock AUD bearish. So for the month of January, we're saying AUD will be bullish until like maybe mid January. Cancel. Like mid January, then bearish. So that's why I'm saying first week you don't trade, allow the Judah swing to take place. So for the seasonal chart for Australian dollar, we see that it's bearish. Fine. What's the Australian central bank saying? I think we'll go through that, but for now, this is how I've already done this, but I'm just redoing it for the sake of journaling, because I have to journal this and look back and see how I decided to pick a certain pair. We can see Japanese yen bullish for the month of January. This one clear bullish until it becomes stagnant mid to end. So here we put JPY bullish. See how you can easily align seasonal charts? Like, it makes your trading, even you avoid choppy markets, literally. Swiss franc, this one goes down a bit, then going up, because for this one, even the central bank is still increasing interest rates. I think they last increased in November, if I remember reading very well. So I'll do CHF bullish for the month of January. So if you can see what I'm monitoring here, it goes down a bit, that Judah swing, then bullish. But I'm not saying this is what's going to happen. Like I said, Canadian dollar, we see bearish. So I'm just going for those that are like CAD bearish. So let me just a quick run through. Pound bullish, yeah, pound bullish. Bullish, but choppy most of the month. This is what I don't like. So for this one, we'll put an X to the side just in case, because we'll see if Mexican peso. No, I don't trade peso. Nah. It's good for swing trading, but nah. Okay, so we finally picked the pairs. So we have how many bullish? 3 bullish, 2 bearish. So you can easily match. What can you want to trade? Maybe let's say, what's bearish? Bearish CAD, bullish JPY. You say CAD JPY is a pair I want to look at in the month. What other pair can you want to look at? AUD is bearish, CAD bearish, CHF bullish, JPY bullish, AUD JPY. You pick even maybe the courses. What can you say? CHF AUD, or AUD CHF. It depends. Usually it's AUD CHF. AUD CHF. What else is there? Pound. So I think I've analyzed a few of these. Pound CAD. I'm not sure which ones are on my trading view, but anyway, this is just an example. These are the few pairs we can be monitoring for the month of January. You don't have to trade all of them. This is what pound yen. I want Australia JPY. AUD JPY. Okay, AUD JPY. I think I did this. And so after that, after you notice the pairs that are there, let's see. Yeah, it's still taking it behind. Okay, so you can go to interest rates here. CPI. So the interest rates, the same. So we said AUD, the interest rate is at 4.35. What is the central bank doing? Are they planning on cutting down interest rates, or are they planning on like increasing interest rates? You really don't know that. And from what I read from their last statement, there's still a likelihood that they're going to increase. So for this one, AUD being bearish, to be questionable, we'll put an X there just in case. Fundamentals take time to come into effect, but just in case. It's like you're seeing the probability of it happening because of the interest rates. You'll be like, JPY bullish. Japanese yen has a negative interest rate, that we know, but how the central bank works, it might be bullish. It's been bullish for some time. We'll see how it goes for the month of January. CHF is still bullish. Let's see, all central banks. CHF is still bullish because they're planning on increasing interest rates. Swiss, yeah, even if it's at 1.7, if they're still planning on increasing interest rates, then yeah, there's a likelihood. CAD bearish, Canadian dollar, it's at 5%, but if they're planning rate cuts, when was the last time they increased? December. Wow. Yeah. No, not December. This is in December. So 7th. It's like July. That's the last time they increased. So yeah, you notice all this. So we say AUD, last time they increased November. Yen, Japanese yen, Japanese central bank, they haven't increased. CHF, Swiss central bank, they increased in June, but June, yeah, June, Canada, then pound that is to increase in August. Yeah, so anyway, you just keep track of the statements, so that I can go through the statements to be pretty much a pretty long video and have a long day tomorrow. So we go to Australian dollar, Japanese yen. First thing you do is notice or note down your IPDA data ranges. Note down your markets usually make quarterly shifts in 20 days. They aim for liquidity. So AUD/JPY. What did I say? I wanted AUD to be down, Japanese yen to be strong. So we expect this to be bearish. Make this full screen. Markets are not open yet. How's it going to 2nd January? 1st January, 29th January, it was 4th December, correct? 6th, 9th. Okay, so I think if you remember what to do, 20 days in front from the 1st. Yeah, this I want to explain is 29th, 20 days back. 1920. Is this correct? From 1st January. How did I calculate it? 1920. 20 was 1st December. Wow. 1st December, anyway. So I think I got it wrong here. So yeah, 20 days look back. 1st December, let's see, 20. Let's see if it's 40 here, so it will be 39. So 40 is 3rd November. 60. 60. Huh? 60. Okay, so I just need to correct the errors. So yeah, you can start here. So like I was analyzing, this will just be a quick breakthrough of what I'm expecting. So 20-day look back low here. This is the low behind the 20-day. It's also a weekly swing low. So we'll be expecting when market is moving and when market is bearish. If it's bearish, it attacks the swing highs that were being made, the swing lows, the high swing lows. So like this one here, this will be, we're anticipating that price will attack here and also attack below here, depending on how smooth the month goes. So what do we want to happen? When price opens on the 1st of January, which is today, here, I want price to create a force move upwards. A force move. So I learned this from Deante Forensic Forex. A force move, market open, so you create what's on top is premium, below discount. So it's cheaper to sell in a premium and it's cheaper to buy in a discount. So if you're bearish, sell in a premium. So what do you want to do? Once it reaches here, creates a swing high there. If it as long as it creates a swing high, breaks a swing low, you can confirm you're bearish, and once it returns back into the premium, you can sell for the month and maybe target this swing low here, and maybe target all the way down this weekly swing low. So our overall target can be here. This generally is how I would like markets to play out. if so, you've seen the confirmation I'm looking for. I'm just not going in just because it's within the month and it's in a premium and I'm selling. No, let it create. This is already, this is a swing high here. This is higher than this. What's the high of this? 97580. 975. Okay, so this is a swing high. As long as this is not broken, it creates another swing high. It's confirming to me that it's creating a bearish pattern. And with that bearish pattern, what do? Once it creates that lower swing high, it breaks the swing low that it creates here. Once it breaks that swing low, I'm confirming that bias is bearish. It may not be, it may be a forced break, but these are the things that I've put in place that I'm supposed to follow. Once that happens, I will wait for it to come into a premium and I am going to sell. I'll be selling if I'm going to be trading this per day. In my day trades, I'm going to be looking for sales until it goes all the way down, taking out this swing low here. This would be my preferred target for the month. Going all the way down here, maybe not. But all this will be aligned per week. I think I'll be creating videos for this week, for the opening of the year. I just wanted to show like what I'm going to be looking for in January, so it's easier that we're all on track. I might trade a bit of dollar pairs here and there, maybe not. Yeah, so if we put in you've seen we've put in seasonal charts. We're also putting in IPTA data ranges, interest rates. We're also putting in COT reports. Those are already things I'm putting in place where I'm like, I want the probability to be more in my favor. For me to trade easily with these pairs. And we'll see how it goes. If it won't be bearish, if it will, then So yeah. So for now, it hasn't broken any. Okay, it's broken a swing low here. But we have to wait for the month to open. Yeah. So I think that would just be an example I would give. Then AUD JPY, say CAD JPY. Which ones are here? CAD CHF. This one is a bit radar. This one is so nah. Pound AUD, this one is good because pound anticipating it to be up, AUD down. Yeah, this one, so it can be almost the same thing. So 30th one first, this, so yeah. So even here, what I would like is for the month to open bearish, this swing high here, then it breaks it. Once it breaks its swing high, creates a fair value gap, whatnot, comes back into a discount, then we buy, then we'll be attacking swing highs. This is a swing high that's here. This will be our overall target point for the month. Then if you want to swing it all the way, what's the high of the 20-day look back here? But it's easier if you're targeting swing highs. Then 40-day look back. Then 60-day look back. And these will be your targets if you're bullish. But it depends. Anyway, it depends. We'll see how it goes. We'll see how markets go. But that's just a quick review of what I'm looking at. And you can keep track of all this just by also keeping track of what's happening in central banks. Let me just take a quick glimpse at Bloomberg. What articles are there today? So you see, I'm incorporating, before I even go the technical route, I'm going in on US consumer debt just returning to normal. So yeah, There's a way you can read Bloomberg articles for free. Wow. Anyway, I'll try to do this later on. Central banks. So you see, like China news will be in correlation with Australian dollar. Or best Australian home price growth laws. So yeah, I don't know why that other article was refusing. RB rate cut in 2024 could help spur demand. So like headlines like this, you've already seen within the seasonality supposed to be bearish. We start looking at headlines. What are the major people saying? So this is quite long. Australian home price growth showed further signs of cooling in December. Take some hit out. Yeah. So like what interest rate hikes along with persistent cost of living pressures were saying affordable and taking some hit out. Yeah, the Reserve Bank left interest rates at a 12-year high of last month after a surprise hike in November. The central bank, which next meets in February, maintains a hawkish tone as the economy and labor show ongoing. So they're showing that they may still increase, but what's showing right now? You've seen these headlines. Slows further. It seems like it's cooling. So the only time they are meeting is February. So for January, there can still be a possibility for people to still go with the same data of what they're looking at is slowing down. So it might be bearish. I'm not saying it will. I'm saying it might be bearish. So we always keep that in mind. Yeah, so you can read articles on Bloomberg. Yeah, because I know if you just open it somewhere to show you a paywall for you to read the whole thing, but yeah, you can read articles. Yeah, so you can just read the whole article. This is where I keep track of like fundamentals. What are the central banks saying? What are major economists saying? It's not always the holy grail of what it's just you have in mind. Like once I go to a chart, why is it up? Why is it pared down? Why is it? It's not always. Oh, because it's a fair value gap, it has to go up. Because it's an order block, it has to go up. It has to go down. Because there's buying pressure, selling pressure. No, markets are moved by the central banks. It's all economics. Once you understand macroeconomics, this is all macroeconomics. It's you can have basic videos are there on YouTube for macroeconomics. You learn a few stuff. You understand, okay, what causes the housing market to go up, to go down? How does it affect the economy? If there's more money, what happens? Why are they increasing interest rates? You understand. Even the statements themselves that the central banks give, you just read through the statements. They tell you what they're planning on doing. It's not always you just open the chart and you're just like, okay, let me just open just any just go USD card. Oh, okay. USD card. Okay, it's bearish. Okay, here there's a fair value gap. Here there's an order block. Here, like, I noticed. I knew all this even last year, but these were mistakes I was making even myself. And this is me being accountable. Not only it's like I'm telling my past self the mistakes I was making, and I know there's some people that are making those mistakes. I understand you can still make money just trading off a model, but make your model work better. I know just the whole purpose of all this is to make money, but you feel happier once you understand why it's moving a certain way. Like no one will steal knowledge from you. That's the thing. You would understand it. For some of you, maybe the only thing is to make money. For some of you, is to open hedge funds, trade on behalf of people. But like, how do you trade and make it safer? Like, you know, these are such things. Here you see dollar, Canadian dollar. Dollar was bearish for some time. This whole thingy because the indication of rate cuts. I think that was in December. When did it start dropping hard? Yeah, you just understanding economics, and you're just like, okay, where am I going to target? Where's the next swing low? Here. You sell from here from this December, and there's a Santa, what do you call that? Christmas rally or Santa rally, I don't know. That's one. All that is aligned with the signaling of rate cuts. You buy. I'm not saying you buy hard. Be Make sure your thingy is up to thingy, your risk management. But you see, you're putting the probabilities higher within your thingy. So yeah, that's basically what I'm going to be looking at for the month of January. I'll make a proper breakdown video of how. So these are the ones you can do anything. CAD is bearish, GBP card, CHF card, whatever you know how to match this stuff. You can match them. You can then choose what to trade. Go check the interest rates. Um, you see the American one. You go to the thingy, Federal Reserve. You go read. You go read what they're planning. You go to their website. They have a link here. You can easily search Fed minutes. You read the minutes. What are they looking at? They This data is not hidden, but us as traders hinder ourselves because of it's all about money. We feel lazy reading. I can't read an article. I can just try to make time. But like, it makes things easier. You can easily even do position trades, especially with this. And this year I'm going to be recording myself, putting all this into perspective, like showing it step by step. I show my trades, where I entered, where I came out. I'm not going to be winning everything. I'm not saying this is a holy grail. This is what I believe. This is what works for me. It might not work for others. Different things work for others. Swing highs, but um one thing I've learned is simplify your trading. Just make it just as simple as that. Just these simple rules that I've made. If those are not made, like, you're quite right, I've put all these blocks like seasonality. Is this going this side? This going this side? Um, Fundamentals. Is this happening? Like, those are things I'm just trying to understand. Like, if market is moving, I know if market is moving in that direction, it will move there with speed. And what are the characteristics of the bullish market, bearish market? I feel like people ignore that stuff. A bullish market, higher swing lows, higher swing highs. Bearish market, lower swing lows, lower swing highs. It's just simple things. And what's a swing high? Can know it. Yeah. Those are just simple things. But yeah, I wish you all a successful trading week if you'll be trading in the first week. And so, like I mention all the time, this is just for me. This is for me to journal, to look back, to come watch it back again by the end of the year and say, okay, I did that. This is why I went wrong. This is how far I've come in my trading. If you'd like, you can be monitoring. These are not signals. This is not financial advice. Just a legal disclaimer in case I didn't put it out there. It's not financial advice. Don't take whatever I say within these videos as a holy grail. This is me having fun. It's not my hobby. It's something I'm taking serious because it's time. I've taken it like a hobby. You make money here and there, you stop. Yeah, but yeah. Happy 2024, and I wish you guys successful trading.